Hello guys, so today we will discuss presentation of financial statement, group 2, paper 12, presentation of financial statement. Okay, so this presentation of financial statement is a separate topic in group 2. In examination point of view, you can expect around one minimum 12 marks, 10 to 12 marks problem as well as 1 mark and even short notes also you can expect. So in examination point of view, around 12 to 14 marks you can expect in examination. So most of the examination they are testing the presentation of financial statement topic. So very important for examination. For practical life also this topic is very important. For any type of business or any type of company, this presentation of financial statement is one of the major task for the accountant for the preparation of financial statement. Okay, so what is this presentation of financial statement under schedule 3? What is this presentation of financial statement under schedule 3? What is this presentation of financial statement? What is this schedule 3? So presentation of financial statement. What is financial statement generally? What is this financial statement? What is this financial statement? So before getting into schedule 3 or presentation of financial statement, just generally think about your final accounts. In final accounts, what we will do? Final accounts. These final accounts we used to study from our school days. Correct? Commerce group, if you studied commerce group, there will be definitely one question from final accounts. Okay? And also college level you have final accounts. Even foundation, I guess you have final accounts. Even group 1 CMA inter group 1, there also you have preparation of final accounts. Correct? What is this final accounts? Purpose of final accounts. In final accounts, normally what we will do? Remember our old school days final accounts. Trading account will be there, then P&L account will be there, then balance sheet will be there. Correct? Trading account, P&L account, balance sheet will be there. Correct or not? So in trading account we have this opening stock, purchases, direct wages, direct expenses, then closing stock, then you have gross profit. Some of the major items I am discussing. Correct? We have to prepare like T-type trading account. Then we have to write all these items. Correct? So finally we have to get the gross profit. Correct? Then next we will prepare P&L account, then by gross profit. Correct? Thereafter we will write all the other expenses. All the other expenses we will write. Then we will arrive the net profit. Correct? Then we will prepare balance sheet. Correct? Balance sheet you have liabilities, assets. So this is how we prepare our final accounts. Correct? What is the purpose of preparing final accounts? If I prepare final accounts, what is the information I will get? I will come to know my gross profit. I will come to know my net profit of the company. I will come to know my liabilities and assets of the company as on some 31st March. Correct? As on 31st March, what is my liability, what is my asset. So all this information is available in final accounts. Correct? This will be prepared, this trading P&L balance sheet will be prepared after doing a lot of adjustments. Trading account we will do lot of adjustment. For P&L account we will do lot of adjustment. What are the lot of adjustments? Outstanding expenses, prepaid expenses, provision for doubtful debts, taxation income, credit side we have other income, dividend income, interest income. All these things we will do. Correct or not? So this is our final accounts what we did till now. Correct? So what is the purpose of preparing final accounts? To know the performance of the business. To know the performance of the business. How I will know the performance of the business? By going through my trading and P&L account, I will come to know what is my net profit. That is my performance of the business. I can refer my performance of business by referring this P&L account. And also what is my financial position of the company, balance sheet, liabilities, asset. What is the assets I have as on 31st March? What is the liabilities I have as on 31st March? By going through my balance sheet, I can refer my financial position. I can take decision based on my financial position as an investor. Then what is preparation of financial statement? Then what is final accounts, preparation of final accounts, and what is preparation of financial statement? What is the difference between these two? So if you know this final accounts already, trading, P&L, balance sheet, how to prepare, and you know the accounting treatment, how to do accounting treatment for outstanding expenses, prepaid expenses, how to make provisions, okay, how to calculate depreciation, then 90% of learning is already over. 90% of learning is already over. You already know the 90% of presentation of financial statement. Presentation of financial statement, 90% you already completed. Balance 10% only we have to learn now. Balance 10% only we have to learn. Then what is that balance 10%? Then what is the 10%? That 10% only we are going to learn. So the point is presentation of financial statement. Okay. Schedule 3. Okay. So what is this presentation of financial statement schedule 3? So till now we will learn about final accounts, that we know how to prepare trading account, P&L, balance sheet. So additionally we have to learn how to present those items in a proper format. How to present those items, that is trading account items, P&L account items, and balance sheet items in a proper format. So in old days what we will do normally, P&L account will be there, trading account will be there, correct? P&L account, as per our wish we will write the expenses. For example, to salary, to rent, to depreciation, to what else, many expenses, electricity expenses, to traveling expenses, to taxation. Like that, whatever the manner we want, we will write the expenses. Here also, by interest income, by dividend income, like that we will write in our P&L account. There is no proper procedure to write the items in our school days or even in college days also, correct? Balance sheet also, if you take, what we will do, sometimes we used to write as per our wish, cash we will write, then inventory we will write, then what else, sundry debtors we will write, right? Here also, first normally we used to write capital, resource and surplus, then borrowings, long term borrowings, then current liabilities, sundry creditors, provisions. Likewise we will write and tally the balance sheet, correct? Our objective is to write the items and try to tally the balance sheet and try to get the net profit. That is our general learning in our school days, correct? So what we are going to learn here additionally is how to present this item in a proper manner. How to present these items in a proper manner in some sequential order. In some sequential order, proper manner and in some sequential order as per the format. What is that format? Where it is given? It is given in Schedule 3. What is this Schedule 3? Where it is available? Schedule 3 is available under the Companies Act 2013. Schedule 3 is available under the Companies Act 2013. So as per the Companies Act 2013, they mandated that every company should follow this format. Every company should follow this Schedule 3 format. Okay? As per section 129, as per section 129 of the Companies Act 2013 says that Schedule 3 is applicable. That Schedule 3 is applicable from 1/4/2014. That Schedule 3 is applicable from 1/4/2014. Okay? So all the companies which are covered by Companies Accounting Standards rules and regulation has to follow this Schedule 3 Division 1. Schedule 3 Division 1. Okay? Then what about Division 2, Division 3? Division 2 is for companies following Ind AS. Company is following Indian Accounting Standard. Okay? Division 1 is for companies following the existing accounting standard. Existing accounting standard. We have two accounting standard in India now. One is which is existing accounting standard, and also another one is Ind AS, that is Indian accounting standard, that is new accounting standard. Okay? That is not applicable for you. Indian accounting standard is not applicable at inter level, and this financial statement given here is also not for Ind AS purpose. It is for normal accounting standard purpose only. The financial statement is given at your material. So we will discuss about Division 1. Division 1 financial statement. Okay? That is for normal existing accounting standards. Okay? So now the next question is, what is this Schedule 3? Now the next question is, what is this Schedule 3? How it differs from our existing final accounts? How it differs from our existing final accounts? Okay? So this Schedule 3 is basically what? Schedule given under the Companies Act. Schedule given under the Companies Act is majorly having two sets of forms. Under that, Part 1, Part 2. Part 1 is form of balance sheet, and Part 2 is form of statement of P&L. Okay, that is income statement. Okay? Form of balance sheet, form of statement of P&L. Schedule 3. Okay? So, same logic, same approach, same accounting treatment. Nothing is changed in accounting treatment. The same logic. Whatever you do in final accounts, the same thing only we are going to do. What is the new thing we are going to learn is preparation and presentation. Presentation is the major thing that is differed from the existing final accounts. Presentation means how to write the items in the balance sheet, how to write the items in the P&L account. That is your income statement. Okay, how to present that. What is the order we have to present? That is what we have to learn. We have to memorize. Okay, because this is the format is followed in many companies. All the companies are following this format. So when you are going for an employment, if you want to prepare a financial statement, you have to follow this format only, Schedule 3. If Ind AS is not applicable, this format is applicable. If NDA is applicable for that company, then we have to follow some other format. Okay, so this thing is for normal accounting standard. This for Schedule 3, this thing is for Division 1, that is for normal accounting standard. Okay, that is what we are going to discuss now. So balance sheet, come to Part 1, balance sheet. this part 1 balance sheet is categorized. Normally tell me, in balance sheet what all the things will be there in our old days? 2 headings major is what? Liabilities, assets, correct? Liabilities, assets, correct? Here we have to make it equity and liability. In old days balance sheet will be liabilities and asset. Here it is equity and liabilities. Here it is assets only. Okay? Equity and liabilities, asset. This is the heading for the liabilities and asset. Under the equity and liability, you have subcategories. Means broad headings. One is shareholders funds. Okay, you know, we will discuss what is shareholders fund, what is all those things we will discuss detailedly. Okay, then share application money pending for allotment. Share application money pending for allotment. Then you have next category, non-current liability. Then what will be the next category? Non-current liability is over, then current liability. These are the major headings. Headings under the equity and liabilities. Okay, these are the major headings under the equities and liabilities. Then assets, come to the asset side. Asset, you have 2 category. What will be the category? Guess, any guesses? Here what are the 2 category, major category? Apart from shareholders funds, you have non-current liability, current liability. Similarly here you have non-current assets, current assets. These are the broad headings under the equities and liabilities, under the assets. These are the broad headings. Under this, below you have a subheadings. We will discuss all those things. But before that, balance sheet will be categorized like this. Whatever you studied in final account, same logic. Whatever you studied in your schooling, college, CMA, intergroup, and same logic, same accounting treatment. But only one thing is presentation. For that, institute is asking separate 12 marks question. Very simple, separate 12 marks question for only for understanding the presentation purpose. How you understand the presentation? Are you able to present properly as per schedule 3 or not? That is their objective. That is the topic heading also. Topic heading is what? Presentation of financial statement. They already know that you know accounting treatment, how to account purchase, how to account sales, how to account expenses, how to account outstanding expenses, how to account prepaid expenses, how to calculate depreciation. All these things you already studied. But here the expectation from the institute is how you are able to present that information properly. If you are presenting this information to third party, if you are presenting this information to shareholders, will you be able to present properly as per schedule 3 or not? That is the expectation. Okay, so balance sheet broad category is over. Then we will so the next thing is statement of P&L account, that is part 2. Part 2 is statement of profit and loss. Okay, so in our old days we have this thing. We used to prepare trading account, P&L account, gross profit will get, finally here we will get net profit, correct? There will be many items in trading account and there will be many items in P&L account. So here we are going to prepare statement of P&L account. And also in old days we used to prepare in horizontal format. Okay. But in case of Schedule 3, statement of P&L, we have to follow the vertical format only. And also the items are minimized. And bringing under the certain category. Okay. For example, in P&L account in old days, what we will do? Salary expenses. To salary we will write. If bonus, to bonus we will write. Anything paid to employee. If PF is paid, then PF we will write. Then what else? Any allowance, medical allowance, we will write. All these are expenses related to whom? All these are expenses related to employee, correct? All these things are related to what? Employee. Many other expenses also, we will leave allowance. Likewise, you have many expenses related to employees, correct? Then interest we will pay to banks, that is one expenses. Then we will write to depreciation, to amortization, correct? Correct or not? Depreciation is for what? Depreciation is for fixed assets. Amortization is for intangible assets, correct? So like this we will write. Then all other administration expenses. Administration expenses is what? Office expenses, petrol, electricity. Likewise you have many other expenses, printing and stationery. Likewise you have many other expenses in our old P&L account format. So apart from this in trading account you have opening stock. Then in here you have closing stock, to opening stock, closing stock, correct? Difference. And we have purchase also here, purchases, correct? Opening stocks plus purchases, direct wages, all those things. Then finally you will get gross profit. This gross profit is transferred here. After deducting all these expenses, we will get finally net profit. This is our existing trading and P&L account. So what we are going to do under the statement of P&L account? What we are going to do under the statement of P&L account? We are going to simplify all these items. We are going to simplify all this trading and P&L account, and we are going to write in a different format. Here in trading account, we used to write by sales also. Sales from direct sales, all those things we will use to write. Okay. So sales, like that, here the name is changed actually. In new format, name is changed one point, and another one is items are grouped under certain category. For example, salary, bonus, PF, leave allowance, medical allowance, all these things are related to what? Employee only, right? Then they will call it this item as an employee benefit expenses. Like this, there are many changes in the new format, that is Schedule 3 format. We are going to write those format now. So as I said, the things should be written in vertical format, not in T format. It should be written in vertical format, like particulars, then you have notes, then current year, then previous year, comparison. For comparison, 2 years things we should provide in practical scenario, but for examination, usually they will ask for only 1 year. Okay. Particulars. first item as per the schedule 3. As per schedule 3, first item is revenue from operations. That is nothing but your sales. Sales generated from operations. They are selling. Here the name is changed as, your sales name is changed as revenue from operation. It is no more sales. It is no more called sales. It is called as revenue from operation. That should be your first item. Something first item you are getting revenue from operations. Okay. Second item, other income. Second item, note number something will come. Okay. This note number depends on the question. So note number we have to give breakup. This revenue from operation we have to give breakup below to this P&L account. That I will explain how to give breakup. As of now revenue from operation means how much you generated from your core business. How much is you generated from your core business? How much is generated from your objective? How much revenue generated from your objective? Okay. Core business means what is the purpose of the company started for. From that purpose they generated revenue means, then that is core business, revenue from operations. So that is something. Other income. Other income means other than revenue from operation, other than non-operational income. Non-operational income, for example, dividend. In old days, many items we used to write in our P&L account, credit side. Dividend income, interest income, rent received, interest received. Likewise, profit on sale of asset. Likewise, many income we used to write in our P&L account, right? So all this income together should be presented under the other income. Other income, for that note we have to give separately. Breakup we have to give separately. Then we have to write the total figure here. So revenue from operation, that is operational income plus other income means non-operational income. So that is one income. Together we will get total revenue. We will get total revenue. Okay. Revenue from operation plus other income equal to total revenue. You got the P&L side. Credit side is over. Credit side is over. There is no trading account. There is no separate P&L account. All together we have to do in one format. That format is schedule. This is as per schedule 3. This format only we have to use it. Okay. So then what else? So income side is over. Then come to the expenses. Total is meant as 3. 1, 2, 3 is over. Then fourth. Income is over. Then ultimately you will get expenses. Ultimately you will get expenses. Okay. Under the expenses, first item. Under the expenses, first item as per the format is, institute material format is cost of material. Note down this word. Cost of material. Cost of material consumed. Cost of material. Material means raw material used for production. Material means raw material used for production, consumed. That is how to identify this. Opening stock of raw material plus purchases of raw material minus closing stock of raw material equal to cost of material consumed. Only material consumed for the purpose of production should be written here. If it is a manufacturing company, they are into production of something, then this thing will come. If it is a manufacturing company, then this thing will come. Cost of material consumption, we have to write it separately. If it is a trading company means what? Only buying or selling the goods. They will buy and they will sell the goods. They will not do any process. They will not do any further process on the material. Simply buying and selling is trading. So there will not be any material consumption because they are just agent. They are buying and selling the goods, trading activity. Okay. If it is a manufacturing company, then cost of material consumed, we have to write it separately. Expenses incurred for the production, raw material incurred for the production. That is your cost of material consumption. Okay. Then next item as per the format. Purchase of stock in trade. If the goods is purchased only for the purpose of trading, should be written separately. It's an expense. It's an direct expenses, purchase of stock in trade, okay, triple X, that is amount, okay. Then change in inventory. So change in inventory, what is this change in inventory? What is the meaning of change in inventory? Change in inventory of finished goods, work in progress and stock in trade. Change in inventory of finished goods, work in progress and stock in trade. Change in inventory of finished goods, work in progress and stock in trade. What is the meaning? What is change in inventory? How to identify that? What to compare? How to compare? That is opening stock minus closing stock. Opening stock minus closing stock equal to something will come. That something we have to write here. You got it or not? Opening stock will be given, closing stock will be given. That is which opening stock? Only opening stock of finished goods we have to take it. Only opening stock of WIP we have to take it. Only opening stock of semi-finished stock in trade we have to take. Stock in trade we have to take it. Only opening stock and closing stock of finished goods we have to take it. Opening stock of closing stock of work in progress we have to take it. Opening stock and closing stock of stock in trade only we have to take it, not raw material. Raw material, if it is a manufacturing company, raw material should be presented separately under the cost of material consumption. Opening stock raw material plus purchase of raw material minus closing stock of raw material separately presented. Only this finished goods, change in finished goods, change in WIP, change in stock in trade only presented here. Opening stock minus closing stock. Formula is opening stock minus closing stock, something will come. That's something we have to write here. Okay. For example, opening stock is 10,000. Okay. Minus closing stock is 15,000. Total. I am just telling the total. 10,000 minus 15,000. 10,000 minus 15,000. Then what I should write here? I am under the expense category. 10,000 minus 15,000. What I should write here? How much I should write here? 5,000 I should write here. Correct? 5,000 how should I write? I should leave it as a 5,000. I have to put in bracket. I have to put in bracket because my closing stock is greater than opening stock. Extra 5,000. So 5,000 extra, so I am minusing from my expenses. I am minusing it from my expenses. Why? Because if my closing stock is more than opening stock, then what will happen? If my closing stock is more than opening stock, then what will happen? My profit will increase. If my profit will increase, then my expenses will be reduced. Correct? Correct or not? So that is why I am reducing from my expenses. All other things are expenses, but here I am reducing from my expenses. While working out the problem, you will understand. For the time being, you just go through opening change in inventory means it is opening stock minus closing stock. It is always opening stock minus closing stock. Whatever the figures coming, accordingly we have to write it. Okay? I will explain this while solving the problem. I will explain how to do this. So as of now, revenue from operations, other income, total revenue from operation plus other income, total revenue, expenses, under the cost of material consumed. Next item is purchase of stock in trade, then change in inventory, then next item, employees benefit expenses. Anything paid to employee, salary, bonus, PF, ESI, medical allowance, travel allowance, all the things. Okay, that should be categorized as an expenses. Okay, then finance cost. I am writing the format schedule 3. Okay, I am writing the format schedule 3. Finance cost means what? Finance means what? Finance means arranging funds. When I will incur cost if I arrange funds? If I borrow loan, I have to pay what? Interest I have to pay. I have to pay processing fee for sanctioning the loan. I have to pay documentation fee. I have to pay auditor fee. I have to pay consultant fee. Anything related to finance. All these things will come under the finance cost. That is majorly interest. I have to pay interest to my lenders. That is finance cost. Okay. So that I have to present under the finance cost. Then what is the next item? Next item is depreciation and amortization. Depreciation and amortization. So depreciation and amortization. What is the depreciation? You know the meaning. Amortization. Depreciation is for tangible asset, fixed assets. Amortization for normally intangible asset. So together we have to write one figure. Then other expenses. Other expenses. Then you will get total expenses. Total expenses. Okay. Then revenue minus expense equal to revenue minus total revenue minus total expense equal to profit before exceptional and extraordinary items and tax. After minusing revenue minus expenses equal to profit before exceptional and extraordinary items and tax. Then what is the next item? As per the thing, exceptional item I have to do adjustment. What is this exceptional item? What is the meaning of exceptional item? What is the meaning of exceptional item? What is the meaning of exceptional item? Exceptional item means it is related to business, but normally it is not recurring in nature. Exceptional item means it is generally related to business only, but normally it won't recur in nature. Non-recurring in nature but related to business. Like insurance claims. Insurance claims for loss of in my godown stock is lost due to fire. So I got an insurance claims from the company. Loss of my godown goods is lost due to fire is related to my business, but that is not recurring in nature. That is not recurring in nature. So it is an exceptional item. Similarly, sale of fixed assets. Similarly, sale of fixed assets. I don't sell my fixed assets regularly. You got it or not what I am saying? Regularly I don't sell it. It will happen occasionally. Rarely it will happen. Correct? Likewise, if it is related to my business and non-recurring in nature, then it is an exceptional item. Then we will come to the extraordinary item. Okay? First, profit before exceptional and extraordinary item and tax. After that, I am doing adjustment for exceptional item. Income or expenses, whatever it is. Income or expenses, accordingly I have to give adjustment. Then after doing this adjustment, exceptional item, then I will get profit before extraordinary item and tax. Profit before extraordinary item and tax. Then what is extraordinary item? Not related to business and non-recurring in nature. Not directly related to business and non-recurring in nature. That is extraordinary item. For example, government grants received. Government grants received from the government. Okay? Sometimes, generally government itself voluntarily will give some amount, which is not related to our business directly. Okay? So, that is extraordinary item, not related directly to our business, but and also it is non-recurring in nature. Not related to business and non-recurring nature. Exceptional item, it is related to our business but non-recurring in nature. But extraordinary item, not related to our business and non-recurring in nature. Exceptional item, what I said? It is related to our business and non-recurring in nature. Extraordinary item, what I said? It is not related to business and non-recurring in nature. That is the difference between exceptional item and extraordinary item. Okay? For example, government grants received from the government, that is an extraordinary item for my company. I didn't expect that amount. It came, government itself voluntarily gave that amount to me. Or else gift received from anybody. On the name of company, gift is received from anybody. On the name of company, I got a gift. Then that is an extraordinary item, non-recurring in nature. Okay? So likewise, I have to categorize. Income or expenses, whatever it is, I have to do adjustment here. I have done adjustment for extraordinary item also. Exceptional item, extraordinary item, hope you understand, recurring in nature, related to business but non-recurring in nature. That is exceptional item. Extraordinary item, not related to business, non-recurring in nature. Okay? So profit before extraordinary item and extraordinary item thing is over now. What is the next step? Then you will get profit before tax. Profit before tax. We did an adjustment for exception. Next item is profit before tax. So next to profit before tax, the next item we have to arrive the tax. That is tax expense. Tax expense. Okay. Under the tax expense you have current tax. And another one is deferred tax. Current tax is basically calculated for the current year profit, and deferred tax is for, it is as per AS 22. As per AS 22 we have to calculate deferred tax. I will explain what is deferred tax. Later I will explain. For your level and your examination purpose, for calculation of deferred tax and all, they don't test, but basic concept I will explain. Okay. After doing profit before tax minus tax expenses, tax expenses, you will get what? You will get what? Profit and loss for the period from continuing operations. Profit before tax minus tax expenses. You will get profit and loss for the period from continuing operation. Something you will get. I will explain what is continuing operation and what is discontinuing operations. Okay. Continuing operations means I am running my business properly and I am able to generate profit from that business, or loss, I am incurring loss from that business. That is my continuing operation. Okay, I don't have an intention to close the business. For example, in my company I have 3 division. I have 3 division. Division X, Division Y, Division Z. Division X, Division Y, Division Z. Out of this 3 division, 2 division is under continuing operation. Continuing operation means I am making production from this division and I am able to sell to the market. I am able to generate revenue from this division because I am operating this division. X plus Y I am operating continuously. But Z I already closed. Z division I already closed. Discontinuing, or I am going to close this Z. There is no much operation from this Z division. It is idle. This Z plant is idle. Even though if it is idle, I may generate some income from this Z plant because I have some vacant land in my Z plant. That vacant land I can't keep idle. So what I did, I gave rent for others. I am generating rent from that land. I used for parking facility. So I am collecting parking. I am able to generate income from the parking business. That is not my business. But I closed this division Z. That Z division is located in one area that I am having lot of space for parking purpose. So I leased out to someone. I am able to generate some revenue from that plant location, but Z business is closed, but I am using that space, empty space. No, that profit I have to write separately. So X plus Y, I got some profit, that I am writing here. Profit and loss generated from continuing operation, because X plus Y I am doing operations correctly, but Z I closed it down already. Still I am able to generate little bit income from that. That little bit income I have to write separately. Profit and loss from discontinuing operation. This is AS 24, accounting standard 24, which is not there for you. Discontinuing operation AS 24. So we need not to worry about much, but for basic understanding, you please remember this is enough. So amount XXX, okay. So P&L from discontinuing operation AS 24. Whatever the income generated, we have to write here. Then tax related to, tax expenses related to this discontinuing operation. We have to pay tax for this also, because we got some revenue from this discontinuing operation. Still we have to pay some tax. This minus this. Profit and loss after tax. Profit and loss after tax from discontinuing operation. Before tax is this much. I am calculating tax and deducting from this. Then I am getting some figure. Okay. Hope you are able to understand my explanation. You please keep the material along with you while discussing this. You please go through the material also. So this one, and profit and loss for the period. Profit and loss for the period is nothing but profit after tax from continuing operation. Profit after tax from continuing operation plus profit after tax from discontinuing operation. That is my total profit. Okay, my total profit. Profit and loss for the period is profit after tax from continuing operation plus profit after tax from discontinuing operation. Okay. Then finally EPS, earning per share. This is accounting standard 20. Accounting standard 20 is also not there for your syllabus, so we need not to worry about much. So for your understanding, EPS is what basically? What is the meaning of EPS? EPS is an earning per share. Earning per share available to equity shareholder. Earning per share available to equity shareholder. Assume profit and loss for a total period is 10 lakh rupees. Assume profit and loss for total period together it is 10 lakh rupees. I have 2 lakh equity shareholders. I have 2 lakh equity shareholders. How much I have? 2 lakh equity shareholders. Then what is my EPS? Basic. In this you have 2 category, basic, diluted. For our level it is not required now, but I will explain little bit. Earning per share is earnings available to equity shareholders. Assume this 10 lakh is available to equity shareholders. So 10 lakh divided by 2 lakh. 10 lakh is profit available to equity shareholders divided by number of equity shares. Profit available to equity shareholders divided by number of equity shares equal to 5 per share. 10 lakh divided by 2 lakh equal to 5 per share. 2 lakh into 5 equal to 10 lakh rupees. That is the meaning of EPS, earning per share. Okay. With this your P&L account is over. So before getting into the balance sheet, you should have some input material. They have given some explanation for this all this item. That also we will go through. Then we will proceed with balance sheet. Okay. So just go through the material. After the statement of P&L, next page you please go through. What is the first point? For 1 mark purpose, we will go through wherever I feel important. We will just go through the points. Okay. Section 25 companies, this provision is applicable. That's what they are trying to say. Section 25 company means what? Companies generated for Similar to companies incorporated for the purpose of service, that is non-profit organization. Similar to NGO, NPO, we can start a company also for the purpose of social service or any other purpose. Okay, that is section 25 companies. For that company also we have to prepare this section 129. That's what they said here. The provision of this part shall apply to the income and expenditure account referred to section 129 of the Act in like manner as they apply to statement of P&L. Okay. Then they are explaining revenue from operation. We discussed, first point is what actually in our P&L statement. First point is revenue from operation. Revenue from operation means what? Revenue generated from core business. Revenue generated from core business or revenue generated from my business, exact business. Okay, that is revenue from operation. Okay, revenue from operation. Adala for company other than a finance company. I am not doing finance business. I am not doing a finance company. I am not running a finance company. For that, how should I give the breakup? Revenue from operation shall disclose separately in the notes. Revenue from, in below notes I have to give that, below breakup I have to give, in that how I have to give the breakup. Sale of product how much, sale of services how much, other operating revenue how much, less excise duty. So this is the breakup I should follow for the general companies. General company means other than finance company, because my business is not lending, borrowing. My business is not accepting deposits and lending money. General business other than finance company means how much I got from my got income from selling products, how much I got income from providing services, sale of services. Instead of sale of services, yeah, they said sale of services, we can follow that sale of services. Okay, because we cannot sell the service, we can render the service. Okay, we can only render the service, not selling the service. So for finance company, if it is a finance company, if I am running a finance company, then what should be my income operation? Revenue from operation is what? My major income is interest income, because my business is finance company. Okay, interest income, revenue from interest and financial services, that is should be my major income. But in case of general finance company, if I have an interest income, in case of general company other than finance company, if it is a general company other than a finance company, then my interest income is not my revenue from operations. It is another income, because my business is not finance company. I am doing any other business. Okay. So what is the next one? Finance cost. Finance cost means, as I said, if I borrow, I have to pay interest. Any other borrowing cost is also finance cost. It should be classified like this: interest expenses, borrowing cost, other borrowing costs, applicable net gain, loss on foreign currency transaction and translation. What is the next income? Next item, other income. Other income, as I said, interest income, dividend income, loss or gain or loss on sale of investment, other non-operating income, net of expenses directly attributable to such income. All these things are notes to accounts. We have to give additional breakup, because what we discuss is only statement, the ultimate statement. Below that we have to give this breakup. Employee benefits, expenses, income items, etc. Employee benefit expenses, salary, wages, contribution to PF, other funds, expenses on ESOP, employee stock purchase plan, staff welfare expenses, everything. Depreciation and amortization expense. Likewise, you have many expenses and income. Just come to this material, goods and services. In case of manufacturing company, raw materials under broad heads, goods purchased under broad heads. If my company is a manufacturing company, then notes to accounts. I have to give breakup for raw material. I have to give goods purchased under broad heads. I have to give some breakup, because my raw material usage will be high in case of manufacturing company, because I do production. Okay, so I have to give breakup raw material wise, goods purchased wise. But in case of trading company, purchases in respect of goods traded by the company under broad heads. In case of trading company, I need not to give breakup for raw material, all those things. Simply I have to give breakup for how much goods purchased, because I am doing trading, only purchase, buying and selling only I am doing. So no need for raw material breakup. Okay. In case of companies rendering or supply services, in case of company providing services, gross income derived from services rendered or supplied under products, I have to give in notes how much income I generated from the service income. Okay. So likewise, you have lot of points. Expenses means other expenses. Other expenses means consumption of stores and spare parts, power, fuel, rent, repairs to building, repairs to machinery, insurance, rates and taxes, miscellaneous expenses. All these things are related to expenses. Okay. So this broad head shall be decided taking into account the concept of materiality and presentation of true and fair view of financial statement. As a company, we have to decide how to present the notes to accounts. Notes to accounts, how to present. Disclosures, that is disclosures. How to disclose this information. Okay. Then come to balance sheet. So we will discuss now the format of balance sheet. Part 1. Balance sheet format. Okay. So particulars, notes, current year, previous year. Okay. Particular, notes, current year, previous year. So particulars, under the particulars, as I said already, we have to prepare in only vertical format. Horizontal format is not allowed. Only vertical format we have to prepare under the new names. Earlier we have liabilities only. We have only liabilities. Here we have equity and liabilities. Equities and liabilities. That is my heading. Okay. Roman letter 1. This is Roman letter 1. Under that, one is already we discussed. What is that? Shareholders funds. Okay. Shareholders funds. So note something. I have to write the total figure. Under the shareholders fund, we have share capital. For this also we have to give some notes. Then resource and surplus, this also we have to give some notes. Then money received against share warrant. We will discuss all these things. We know meaning for share capital. Money raised from shareholders will be presented on the share capital. Correct? Resource and surplus also we know. Resource and surplus is an accumulated profit. Whatever we generated past, it should be presented in resource and surplus. And also all other items also will be there. Resource and surplus means P&L account, credit balance, general reserve balance, then capital reserve, capital redemption reserve, securities premium account, and any other specific reserve, revaluation reserve, and you have a tonnage tax reserve, and you have investment revaluation reserve. Like that you have many reserves. Capital redemption reserve, debenture redemption reserve. Like that you have variety of reserve. All these reserves are categorized under reserves and surplus. We will discuss all those items. So share capital, you know, reserves and surplus, you know already the general meaning. Then the third item is money received against share warrant. This also we will discuss in detail. Okay. What is the next item? Now I am just presenting the balance sheet as per schedule 3. Now I am just presenting the balance sheet as per schedule 3. Share application money pending for allotment. Share application money pending for allotment. What is the thing? I received money from my subscribers, but allotment is not made. Remember our issue of equity shares. Remember our issue of equity shares, general topic. You would have studied in your college level, issue of shares. So we will collect application money from the shareholder, then we will allot. Correct? There will be some allotment till happen, yet to be happened, but money received means that should be presented as share application money received pending for allotment. What is the next item? Non-current liability. Non-current liability. we will discuss what is non-current liability, what is the meaning for non-current liability, how to classify all those things we will discuss. As of now, non-current liability is a long-term liability. There will be definition. I will discuss properly non-current liability. As of now, I am discussing only the presentation part. Just the items I am writing here. Okay. So under the non-current liability, you have long-term borrowings. Long-term borrowings. Then you have deferred tax liability, net. I will explain deferred tax liability assets also a little bit. Then you have other long-term liabilities. I am writing just the format availability material. Okay. Then long-term provisions. All these things you got some figure. Okay. Then fourth item, as per our format, first is under the equity and liability, shareholders funds, share application money pending for allotment, non-current liability. Then absolutely it will be current liability. It will be current liability. Non-current liability was then current liability. Under the current liability you have short-term borrowings. Here it is long-term borrowings. Here it is short-term borrowings. Then trade payables. Then here it is other long-term liability. Here it is other current liability. Okay. Here it is long-term provision. Here it is short-term provision. In non-current liability, here it is long-term provision. Here it is short-term provision. So something will come. Then total. Okay. Total. Okay. So liability side is over. Liability side you have equity and liability. Under that shareholders fund is the first heading. Under that share capital, reserves and surplus, money received against share warrant. Then second subheading is share application money pending for allotment. Then third heading is non-current liability. Under the subheading you have this point number A, that is long-term borrowing. Point number B, deferred tax liability. Point number C, other long-term liability. Point number D, long-term provision. And next subheading is current liability. Under the subheading you have point number A, short-term borrowings. Trade payable. B, C, other current liability. D is short-term provision. Then total of liabilities. Okay. Then come to the asset side. So asset side. That is B, not B actually, Roman letter 2. Roman letter 2. So under the assets you have first point number 1, that is non-current assets. Non-current asset. Under the non-current asset you have first category A. Under that you have fixed assets. So under that tangible assets. Under the fixed assets you have tangible assets, intangible assets. I will explain all these items. For the time being I am just writing the format. Point number 3, CWIP, that is capital work in progress. Point number 4, intangible assets under development, that is as per AS 26. Okay, accounting standard 26 deals with intangible assets. That is not for you as per that is not covered under intermediate syllabus. Anyhow, I will explain later what is this intangible assets under development. Okay. B, one non-current asset. Under the non-current current asset, B is non-current investment. C is deferred tax asset net. Then D is long-term loans and advances. D is long-term loans and advances. E is other non-current assets. Other non-current assets. Other non-current assets. Then 1 is over. Then come to 2. 2 is current assets. Category 2 current assets. Under that point A, current investments. Point B, inventory. Point C, trade receivables. Point D, cash and cash equivalents. Point E, short term loans and advances. Point F, other current assets. Then total. Okay, total. So this also I will explain in detail what all the items and everything. So why I am writing this format now? Why I am writing this format? Why I am spending for writing this format? Because the purpose of this chapter itself, presenting the items. Presenting the items in sequence as per the format given under the schedule 3. So the importance here is how you are presenting the items as per, whether you are able to present as per schedule 3 or not, whether you are able to write the disclosures, notes on accounts as per schedule 3 or not. That is the objective of this chapter, not whether you are able to calculate depreciation, whether you are able to calculate outstanding expenses, whether you are able to calculate the net profit correctly as per P&L account. That is not the ultimate objective here. Whether you are able to present further step, next step. So that is why I am writing all the items. Before explaining, I am writing. So I already explained you the P&L statement. Now I will explain the balance sheet items. What are the items? How to give some additional breakup. How to write the notes for all these items. All these things based on your institute material, wherever I feel important, we will discuss that point. Okay. So look at the disclosures. Below the balance sheet, below the P&L, below the balance sheet, we have to give breakup for this item. Schedule 3 disclosure requirement. Schedule 3 disclosure requirement. Just refer. General. Schedule 3 deals only with the presentation and disclosure requirement. Yes, of course. We know the presentation part, and disclosure part also we should know a little bit. Okay. Accounting classification in debt and equity components is governed by applicable accounting standard. So what is equity, what is debt is not given very much in the schedule. We have to refer the accounting standards. Preference shares will have to be classified as share capital and also include preference shares of which redemption is overdue. Okay, preference share capital is also will be treated as a part of share capital. Okay. So now we are going to discuss equity and liabilities items. Under that first item, shareholders fund. Under that share capital we are discussing now. Share capital, how to disclose. You have tallied the balance sheet. You have prepared the P&L. So that is not only enough. In examination point of view or intermediate point of view, there will be 1 or 2 adjustments related to disclosures also. We have to give some additional workings related to disclosure. Not all the points will be tested. All the disclosure points will not be tested. 1 or 2 points. For that reason, we have to go through all these maximum points. Okay. So the first thing, now we are discussing share capital. Share capital is the first item. Under that, how to present this share capital, disclosure, how to disclose this. Below the balance sheet, we have to write this item. We have to write authorized capital. Authorized capital means what? Maximum capital approved in articles of association. In articles of association, what is the maximum authorized capital allowed? That is during my incorporation, what is the amount allowed? What is the value allowed? That I have to write here. Then number of shares issued, subscribed, fully paid and subscribed but not fully paid. That breakup I have to give. After next to authorized capital, I have to write how much is issued out of authorized, how much is issued and how much is subscribed and how much is fully paid out of that subscribed and how much is not yet paid. Then I have to give face value, par value per share information also. Reconciliation number of shares means what is my opening balance during the year, how much I issued. during the year how much I redeemed, what is my closing balance. That is reconciliation of share capital. Reconciliation of number of shares means that's what, issuing, redemption, all those things. Then if there is any right share, preference shares, that I have to give separately. Okay. Then anybody is point number F, if I hold, if my shares is held by holding company, if I am holding some subsidiary company or held by my subsidiary company, that breakup I have to give. Out of total shareholding, how much is held by my holding company. Then one more purpose you remember, if anybody is holding more than 5% shares, then I have to give some disclosure regarding that also. Out of my total number of shares, if anybody is holding more than 5% shares, that also I have to give in disclosure. All these points not very much important, but still you please just go through the points. Okay, maybe we can expect 1 mark. So finally I have to give calls unpaid. How much is unpaid, that also I have to give. And also forfeited shares, how much is cancelled due to some reason, how much shares are cancelled, that also I have to present. So there is one example also, you please go through that, very easy example. Here they have given presentation, just go through. First, authorized capital, 1 lakh equity shares. Answer I am directly reading. Okay. Question, what is the question actually? Authorized capital 1 lakh shares, preference share capital authorized how much? 50,000 shares. Then convertible preference shares how much? 30,000 shares. Okay. Then issued capital, out of 1 lakh shares, equity shares 30,000 is issued, 100 fully paid. Then 90,800 is 100 rupees, of which 80 is called up and paid up. So total 1 lakh shares, out of which I am issuing 30,000 shares I issued, and 90,800 shares I issued. 30,000 shares 100 rupees fully paid, 30,000 shares 100 rupees fully paid, 19,800 shares 80 only paid, called up and paid up. Amount received on 200 shares forfeited. So balance 200 shares is forfeited due to what reason? For non-payment of allotment and first call. Okay. So likewise preference share capital, all these things are given. This is just for your understanding. What is the question? How will this shown in working schedules, assuming first year of operation? This is new company. First year of operation means new company. Just now they started. Year 1 is completed just now. How we have to present? That is the question. First authorized capital given in the question. All the things we have to write it separately. Okay. Then issued capital. How much is issued? 50,000 shares is totally issued. Correct. Issued is separately we have to write. 50,000 how? 50,000. 30,000 plus 19,800 plus 200 equal to 50,000. Then 10,000, 20,000. It is also given in the question. Okay. So then subscribed is also given in the question. Just we are rewriting the question in different format. 30,000 equity shares, 30 lakhs, 90,800 into 80, 15,84,000. Then redemption, redeemable shares, convertible preference shares, all those things we are writing. And forfeited shares separately we are presenting. 2,000. Then my total thing for my balance sheet is 75,86,000. So this is not much important, but just I am going through. Okay, I am not working out the problem. Just I am for your understanding. I am writing. I am just reading the answer. So now you see the reconciliation. Opening balance 0. Why opening balance 0? Because this is newly started company. So opening balance is 0. And fresh issue means this is newly started company. So whatever amount is raised, 49,800 shares, equity shares. This is for equity shares alone actually. 49,800 how it came? 30,000 plus 19,800 equal to 49,800. Amount also we know. So total closing balance is 49,800, 45,84,000. Okay. Likewise, preference shares also. Everything is newly issued shares because this is new company. During the year only they issued the shares. So that is why opening balance is 0. fresh issue. Everything is posted under the fresh issue. Like this, convertible preference shares also they have posted. Now my objective is not to solve the problem. Now my objective is not to solve the problem. I want to explain the line items. I want to explain the line items available in the balance sheet. What is the next line item in the balance sheet? Reserves and surplus. Reserves and surplus. What is reserves and surplus? Accumulated profit, all other reserves will be posted here. Under that, what is the first reserve? Capital reserve. What is capital reserve? Reserves arise by involving in capital transaction. By involving in capital transaction. For example, I forfeited my shares. Profit on reissue of forfeited shares. So profit on reissue of forfeited shares is basically profit of capital nature, and hence it should be credited to capital reserve. They are explaining the meaning, what amount I should transfer to capital reserve. Okay. During amalgamation also, if anything is gain to me when I purchase some company, if I pay less, then that is capital reserve. Correct. For example, their total assets net asset value is 100 rupees, and I am paying only 80 rupees for their company, and I am buying that company by paying only 80 rupees. 100 rupees net worth the company, I am paying only 80 rupees. So whether it is a gain or loss to me, whether I am paying excess or less, I am paying less amount. Correct, because their assets worth is 100 rupees, but I am paying only 80 rupees. Difference is how much? 20 rupees less I am paying. That 20 rupees is my gain. That is capital gain. That is capital gain means that should be transferred to capital reserve. Because that is in the nature of capital. Okay, reserves generated in the nature of capital. Then what is the next one? Capital redemption reserve. Remember our buyback session discussed in classroom. Remember our buyback session discussed in classroom. When I am using the money existing reserve for the purpose of buyback, when I am using my existing general reserve P&L account for the purpose of buyback, that time I have to create CRR account. Similarly, for redemption of preference share also, if I use my existing reserves, then I have to create CRR account. That is the meaning of CRR. Then securities premium reserve. Securities premium reserve is the name given in Schedule 3, but under the Companies Act it is called securities premium account. So we have to follow only securities premium account. Why? Because Companies Act overrides the Schedule 3. Okay. Schedule 3 uses the securities premium reserve, but the Act uses the term securities premium account. Hence the term used in the Act should be used. So securities premium account only we have to take it. This is also one mark. Whether Companies Act override the Schedule 3 or not. Yes, Companies Act overrides the Schedule 3. Okay. Then debenture redemption reserve. This is also one provision. Under some section we have to create reserve for the purpose of redemption of debenture. We have to allocate some money for the redemption of debenture. That is called debenture redemption reserve. Okay. What is the next one? Revaluation reserve. What is this revaluation reserve? Remember AS10, plant property equipment, PPE. We have to do revaluation of our assets, right? For example, my fixed assets value is 100 rupees. Now the market value is 120. So I want to increase my fixed assets value to 120. Okay. So asset side I want to increase from 100 to 120 because market value is increased from 100 to 120. So that's why I am increasing to 120. Now present book value is 100, but I am going to increase to 120. Extra 20 rupees is increased asset side. For that I have to give effect in liability side also. For that I have to create one reserve called revaluation reserve. Okay. That is actually book reserve. That is also non-cash reserve. Okay, non-cash reserve. Just for book adjustment purpose we created. Okay. Then share options outstanding account. What is the meaning of share options outstanding account? Employees, for the employees, company's employees, the company normally will give some option, share option scheme. Share option scheme means if they will put some condition for their employees. What is the condition? If you stay in my company for the next 5 years, after 5 years I will give you some shares to you. I will give you some shares to you at some discounted price. Okay, so that is share option outstanding account. Share option outstanding account means every company will put some money in this account every year. Company will put some money in this account every year. After that condition is satisfied, by employee, later on they will allot shares to the employees. That is ESOS, employee stock option scheme, stock option scheme. Okay, so that is there in your old syllabus, Inter, not there in your new syllabus, the present syllabus, 2016 syllabus. 2012 syllabus, you have a separate topic for employee stock option scheme. Now what I am trying to say is meaning of shares option outstanding account. As per ICA guidelines, note on ESOP share option outstanding account should be shown as a separate item under Schedule 3. This line item should be shown separately under resource and surplus. So we got some money from we have to allot some money. We have to allot every year some money to this account for the purpose of issuing shares at a discounted price to our employee in future. Okay, for that is share option outstanding account. Other reserves, any other reserves should be transferred here, and surplus, surplus in balance in statement of P&L, that is your P&L account, credit balance. Okay, if it is a debit balance, P&L debit balance, what to do? If it is a P&L debit balance, what to do? As per this Schedule 3, what they said is, if it is a debit balance, then present under the resource and surplus account and do adjustment for the resource and surplus account. For example, my resource and surplus is 1000 rupees. My P&L debit balance is 200 rupees. My resource and surplus account is how much? Credit balance how much? 1000 rupees. My P&L debit balance is how much? 200 rupees negative. Loss. My P&L negative means loss. That is why debit balance, right? P&L debit balance is 200 negative. My resource and surplus 1000 rupees credit balance. As per this recommendation, what I should do? I have to present in my liability side resource and surplus 1000 minus 200 P&L debit balance equal to net resource and surplus is 800 rupees. That is what given here. Read here. Debit balance of statement of P&L shown as a negative figure under the head surplus. Similar, the balance of resource and surplus after adjusting negative balance of surplus, if any, will be shown under the resource and surplus even if the resulting figure is in the negative. Okay, that is what they are trying to say. Debit balance should be adjusted with my resource and surplus. Net resource and surplus only I have to present. We will work out all those things later. Then money received against share warrant. What is this meaning of money received against share warrant? So what will happen sometimes for my directors and for my relatives, the company's relatives, they will give warrant. And they will collect money from by issuing that warrant. The meaning of warrant is allotting shares in futures. They have eligible for getting shares in future. Now they will get only warrant that will be convertible into shares later point. That is money received against share warrants to be shown as a separate line item on the face of balance sheet. That is what they said. See here, second paragraph, please refer. Effectively, share warrants are amount which ultimately form part of the shareholder funds. Since shares are yet to be allotted against the same, these are not reflected as a part of share capital but as a separate line item. So what they are trying to say is, share warrant is nothing but we are receiving some money from our directors and their related parties. We will allot shares in future. For the time being, we give warrant. Means they have some rights, definitely we will convert that warrant into shares later point of time. Should be presented separate item below to share capital, shareholders fund, resource and surplus. This item should be written separately. Okay, next to resource and surplus. I am just explaining the format now. Format item meaning. Okay. Separate item, share application money pending allotment. What is the share application money pending allotment? I am issuing shares. I issued application money. I issued application. Lot of people subscribed. Okay, but I am not allotted the shares. That is share application money pending allotment. I am not allotted, so money is pending in my this account. This I should present separately because this is not actual share capital. Yet to be allotted shares are. Okay, so that is what they said here. Share application money not exceeding the issued capital and the extents not repeatable should be disclosed as a separate line item after shareholders funds and before non-current liability. What they are trying to say? My total capital, authorized capital, my total issued capital is 1 crore. Okay, my total issued capital is 1 crore and already subscribed capital is 80 lakhs. Already subscribed capital is 80 lakhs. Issued capital is 1 crore. Already subscribed capital is 80 lakhs. Additional issue I am making. How much I can make? 1 crore is my total capital, out of which I already received 80 lakhs. How much extra thing I can make it? 1 crore minus 80 lakhs equal to 20 lakhs extra I can issue, correct? For that only I can receive subscription, correct? If it is within the limit, I can present between shareholders fund and non-current liabilities. I can present under the shareholders fund and non-current liabilities. Then what is the next step? If the company issued capital is more than the authorized capital and approval of increase in authorized capital is pending, the amount of share application money received over and above the authorized capital should be shown under the head other current liabilities. Okay? What they are trying to say here? My total capital is only 1 crore. But already I received 80 lakhs capital. Now I am issuing extra 40 lakhs. 80 plus 40 how much? 1.2 crores. What is my total capital? Authorized capital is how much? Only 1 crore. My total capital is how much? Only 1 crore. But I got a subscriber for extra 40 lakhs, which means I am exceeding the 1 crore, which is not allowed under the Companies Act. Because I can't raise money more than my authorized capital. Correct or not? 1 crore is my authorized capital limit, but I am raising more than that. Meaning what they are trying to say is, if it is exceeded your authorized capital, your subscription money which is pending for allotment, then balance 20 lakhs, that is more than 1 crore, because I received 40 lakhs here. Already I allotted 80 lakhs capital, extra 40 lakhs received. Out of 40, 20 is within limit, balance 20 lakhs not within the limit. That extra 20 lakhs should not be presented under the share application money pending allotment. That extra 20 lakhs should be presented under the other current liabilities. That extra 20 lakhs should be presented under the other current liabilities. Hope you are able to understand the point. Okay. What is the next one? Non-current liabilities. What is this non-current liabilities? What is non-current liabilities? Actually, what is non-current liabilities, current liabilities, current asset, non-current asset? Just we will go through that first. Come to this page. Form of balance sheet. See, rules for classification of assets and liabilities. Here it is given. What is current liability? What is current assets? That if you know, then you can know the current non-current liability. What is current liability generally? As per our old balance sheet, you please remember, if anything is payable within 12 months, then it is current liability, correct or not? If anything is payable within 12 months, it's a current liability, correct? That is the only classification we know normally. That is also given here. And other points. What is the first one? Current liabilities is expected to be settled in the company normal operating cycle. What they are trying to say here? Current liability is expected to be settled in the company normal operating cycle. Normal operating cycle means what? What is normal operating cycle? Whether normal operating cycle will be same for all the companies, whether normal operating cycle will be same for all type of business. Normal operating cycle means from buying the raw material and making production and keeping godown and selling to the customer and collecting the money from the customer. This is operating cycle. Okay. from purchasing the raw material to collecting the cash from the customer. This is the process, operating cycle. This normal operating cycle will, how many months will take for buying the raw material, making production, and keeping in godown and finding the customer and selling to the customer and collecting the cash from the customer. How many months it will take totally? We don't know. For each business it will differ, correct? In a particular business it will take only 3 months. In another business it will take 6 months. In another business it will take 9 months. In another business it will take 12 months. In some business it will take 3 years. Some business it will take 2 years. Depends on the nature of business. Okay. We can't put the standard time for all the business, because nature of production will differ. For producing an alcohol, for producing an wine, in an alcohol, for alcohol industry producing a wine, it will take many years. Correct or not? We have to keep in some place and we have to wait for some time. Then we can get that wine. Correct? So operating cycle for alcohol wine business, it is totally different from any other business. Likewise, we have to think according to business, this operating cycle will differ. Then what I am trying to say here is current liabilities. Current liabilities is expected to be settled in the company normal operating cycle. If my normal operating cycle is 2 years, then that is my current liability. Why 2 years? Because buying my raw material to making production to and keeping in finished goods to finding a customer to selling to customer to and collecting the cash from customer, for this process it will take 2 years for my business. Then that is my operating cycle. Okay, so there is no standard thing called 1 year. If nothing is given, we have to assume 1 year, otherwise we have to go by their operating cycle. Okay, so current liability, what is the next point? It is held primarily for the purpose of being traded. Traded means anytime I can sell this asset or liabilities also, and it is due to be settled within 12 months from after the reporting date. From balance sheet date, reporting date means what? Balance sheet, as on balance sheet 31st March, from 31st March 12 months count we have to take it. If it is payable within 12 months from the balance sheet date, then it is a current liability. If it is payable within 12 months from the reporting date, means balance sheet date. On that date, if it is payable within 12 months, then it is a current liability. Okay. Then what about non-current liability? Liability other than current liability shall be classified as non-current liability. All these things 1 mark you can expect. That's why I am discussing. All these things you can expect 1 mark. Liability other than current liabilities shall be classified as non-current liability. So current liability only defined. Non-current liability not defined. Non-current liability is negatively defined. If it is a other than current liability, then it is a non-current liability. Okay. Similarly, come to current assets. What is the first point? It is expected to be realized or entered to be sale or consumption in the company's normal operating cycle. Current asset means it is held for sale or it should be realized in the company's normal operating cycle. What is the meaning? What is the meaning? Again you take it debtors. Debtors normally within, if anything is payable within 12 months, it is a current assets, correct? If my operating cycle itself more than 12 months, what I should do? Then that is your current assets. That is also you have to take it current assets. My operating cycle for my business is 18 months, not 12 months. Then that is current asset only. You got it on what I am saying? First we have to check what is my operating cycle. My operating cycle, what is the duration of my operating cycle? If your operating cycle is more than 12 months, then whatever the thing, we have to take it as current assets only. I should not say if it is more than 12 months, then I should not consider current asset. It is not like that. If your operating cycle is 2 years, then 2 years is up to 2 years, anything is current asset. You got it on what I am saying? Okay. Likewise, only we have to define. So then what is the next one? Current assets is held primarily for the purpose of being traded. Okay. Then current asset is expected to be realized within 12 months after the reporting date. Here also from balance sheet date, if anything is receivable within 12 months, that is also current assets. Okay, if anything is receivable within 12 months, that is also current assets. So non-current assets, what is this non-current assets? Assets other than current assets is considered as a non-current assets. Okay, with this thing we can continue the below explanation. So non-current liability, this is what we are referring now. So non-current liability is anything other than current liability is non-current liability. Okay, under that long-term borrowing, what is long-term borrowing? Borrowed for normally more than 1 year. Okay, under that long-term borrowings, from banks we have to present, from other parties we have to present. Loan with repayment beyond 36 months are normally known as term loans. Term loans is if anything is payable, loan with repayment schedule of more than 36 months is called term loans. All other things are cash credit, overdraft, or others, or other than term loan, or other than term loan. Okay, then what is the next one? Deferred payment liability. That is also one type of liability. Normally if it is more than 12 months, then it will be covered under deferred payment liability. If anything is payable more than 12 months, that is sales tax liability, deferred payment of acquisition of fixed assets, all those things. Deposits received from the public, if it is payable more than 12 months, or according to the operating cycle, it is, if it is an non-current liability, then we have to present under the non-current liability. Okay, loans and advances from related parties, long terms, maturity of finances. So what we have to present? This borrowing should be presented further with subclassification as secured and unsecured. What is this secured and unsecured? I am borrowing and giving security, and I am borrowing and giving security to the banker, then that is secured. I am borrowing and I am not giving any security to the banker, then that is unsecured. Okay, got it or not? If I am borrowing with providing security, then that is secured loan. If I am borrowing and not giving any security to the lender, then that is unsecured one. Okay, here also I have to give what type of security I have given. Whether I give the asset, fixed assets means I have to write I have given fixed assets. Like that I have to give some additional information on the borrowings also. Guarantees, I borrowed some loan and my director is given guarantee, means that I have to present separately. I borrowed the loan, but my director is giving some guarantee. Okay, that I have to present separately. Then presentation, then deferred tax liability. What is this deferred tax liability? As per AS 22. So what is this deferred tax liabilities, deferred tax asset? This deferred tax liabilities or deferred tax asset will arise because of timing difference of payment of tax. Timing differences of payment of tax. Why? Because, just tell me whether expenses allowed under the Companies Act, whether expenses allowed under whether all the expenses allowed under the Companies Act is allowed under the Income Tax Act. Just tell me whether all the expenses allowed under the Companies Act is allowed under the Income Tax Act or not. For example, cash payment more than 10,000 rupees. Cash payment more than 10,000 rupees. Whether it is allowed under the income tax or not. Income tax or not. It is not allowed under the Income Tax Act, correct? But it is allowed under the Companies Act, correct? So my profit as per the Companies Act is different from profit as per the Income Tax Act or not? Correct or not? Tell me. Tell me, depreciation under the Companies Act and depreciation under the Income Tax is same or different? it is different. Depreciation, rate of depreciation is different from a rate of, if you compare with the income tax and the companies act, rate of different depreciation is totally different. Correct or not? So depreciation under the income tax is different from depreciation under the companies act, total amount. So my expenses will differ, my profit will differ. My profit as per income tax is differ and profit as per companies act is different. My tax payment calculated under the income tax is also different. Tax payment calculated under the companies act is also different. So the difference is accounted here as deferred tax and deferred tax liability and deferred tax asset. So for your level, this is enough because AS 22 is not included in your intermediate. So we need not to worry much about this area. Okay. Deferred tax liability or asset is arised due to timing difference between the two act, Companies Act and Income Tax Act. Okay. Other long-term liabilities. Any other thing? Trade payables. What is trade payables? Trade means what? Trade payables means what? That should be related to my business directly, my operation directly. If anything is payable directly related to my business, for example, sundry creditors is my trade payable. Sundry creditor for goods or services acceptance should be disclosed as a part of trade payable because that is related to my business. Others means not directly related to business, not directly related to purchase or something like that. For example, provident fund, purchase of fixed assets, all these things are come under the long-term liability, other long-term liability. Okay. And what is the next item? Long-term provision. Long-term provision is provision made for long-term taxation purpose or provision made for employees PF benefit, ESI benefit, gratuity benefit, pension fund benefit. All these things are long-term provision which is not paid presently, which will be paid later. Okay. Current liability. Come to current liability. Current liability. Under the current liability, what is the thing? Short-term borrowings. Short-term borrowings payable within the operating cycle or payable within 1 year. All these things are current short-term borrowings. Loans repayable or demand. All these things. Short-term borrowing will include all loans within a period of 12 months from the date of loan, loans payable on demand, but will not include current maturity of long-term borrowings. Current maturity of long-term borrowings means what? Long-term borrowings means it is normally payable within 12 months, correct? But in long-term borrowings also, some amount will be paid present year, that is payable within 12 months. Long-term borrowings normally the amount will not be paid within 12 months, it will be paid more than 12 months, correct? But in long-term borrowings also you have two type of payment. One will be paid in long-term, one will be paid in more than 1 year, some amount will be paid within a year. But that within a year amount should be classified under other current liability. We will see it that also. Okay. Security wise classification is also required. How much is secured, unsecured, that also we have to see. Guarantees also we have to see. If anything is default to be made, that also we have to present. For how many period I did not pay the amount, that also we have to present. Okay. And next one is trade payables. Trade payable is, for trade payables they are given some additional information. Trade payable means what? Sundry creditors, correct? You know MSME Act, Micro, Small, Medium Enterprises Act. So that if my supplier, if my creditor is registered under that act, I have to present separately under the trade payables one category. How much is payable to these fellows? This MSME category suppliers, how much is payable from my company? Okay. How much is due for that people? Okay. So that is the thing explained here. This is also important for maybe they might test you in this aspect. You have to write separately. While working out the problem, you will understand. So other current liability. So what is that other current liabilities? Other current liabilities, any other things current maturities of long term bill, current maturity of finance lease obligation, interest accrued, all this item is given here. Okay. Short term provisions, anything payable for employees or any other taxation purpose also we have to write here. Okay. Provision for taxation. Then come to asset side, non-current assets. Under the non-current asset, what is the first item you have? Tangible assets, correct? Tangible assets. Under the tangible assets, I think you have fixed assets first. Under the fixed assets, you have land, building, plant and equipment, furniture, fixtures, vehicles, office equipment, other things. Okay? All these things you have to present. Assets under lease, if anything is assets under lease, shall be presented separately. Remember our AS 19 lease classes. Finance lease, operating lease. That asset taken under finance lease should be presented separately. Okay, it should not be part of your general assets. Remember our AS 19 classes. Any revaluation made, that also you have to present. Reconciliation, opening balance, closing balance, purchase during the year, anything is sold, all those things. Then intangible assets, AS 26. What is intangible assets? Normally does not have physical existence. Asset does not have physical existence. That is patent right, copyright, goodwill, trademarks. All these things are classified under intangible assets. Okay. So classification of intangible assets should be presented separately. And intangible assets under development should also be disclosed separately if AS 26 criteria are met. AS 26, leave it as of now, that is not in your syllabus. So if it is intangible assets under development as per AS 26, that also should be presented. Okay, separately. Capital work in progress. Capital work in progress, what is the meaning of capital work in progress? Assets under construction, correct? Asset is getting ready for the future use. Okay, should be a separate line item. If anything, if capital advance, remember for 1 mark, if capital advance should be included under long term loans and advances, and hence cannot be included under capital WIP. What is the meaning? I gave some advance for the purpose of purchasing fixed assets. I gave some advance for the purpose of purchasing fixed assets. That is capital advance. Capital advance should be included under long-term loans and advances, and it should not be included with the CWIP. That's what they are trying to say. I gave some advances for the purpose of purchasing long-term fixed asset, that should be presented under the long-term loans and advances, not under the capital CWIP category. What is the next one? Intangible assets under development. That is as per AS 26, if it is an intangible assets under development, it should be presented separately. Okay. Non-current investment. This is your AS 13. That is also not there for your syllabus. But in AS 13, if it is a non-current investment, what are the things we have to identify? Non-current investment means what? Non-current investment means non-current investment shall be classified as trade investment, other investment, and further classified as property. If I invested in all this activity, property, equity instrument, this I have to write it separately. Okay. Deferred tax assets, similar to deferred tax liability, deferred tax assets. It is a tax which is created because of timing difference and provision difference between Companies Act and Income Tax Act. Okay. Long-term loans and advances. It includes what are the items? Capital advances, security deposits, loans and advances related to related party. All these breakups we have to give. So the point is, our job is not only preparation of balance sheet and P&L. So below that we have to give this information wherever it is necessary. We have to give. But examination point of view, Even maximum 1 or 2 adjustment, 1 or 2 disclosure is tested, not all the disclosures. But please go through all the disclosure for for safer side. We will just go through the important areas. Security wise classification is also required for loans and advances. Secured loan is how much, unsecured loan is how much, bad and doubtful is how much, directors, if anything is given to directors, that also we have to write it separately. Then other non-current assets, long-term trade receivables, normally receivables more than 12 months is a long-term trade receivables. Okay. So current investment. Next one is current investment. Realizable within 12 months is normally current investments. Inventory breakup I have to give. Raw material how much, WIP how much, finished goods how much, stores and spares how much. All this breakup I have to give. Disclosure requirement, schedule 3 disclosure requirement. Okay. Then trade receivables. Here you see, this is important. Aggregate amount of trade receivables outstanding for a period not exceeding 6 months from the date they are due for payment should be separately stated. My sundry debtors, my trade receivable is, I am not able to receive money for more than 6 months now, then that line item should be presented separately. Then line item should be presented separately in your balance sheet. That's what they said. Okay. Cash and cash equivalent comprises balance with bank, cash on hand, checks, drafts on hand, everything. Short term loans and advances payable within the operating cycle or payable within the 12 months will come under short term loans and advances. Other current assets, anything other than the above items we have to present here. Okay. Then come to the next thing. Unamortized portion of share issue expenses. Unamortized portion of share expenses. Pre-incorporation expenses. Okay. Or incorporation expenses. Normally what we will do, amortization of expenditure. Here what they said is Schedule 3 does not contain any specific disclosure requirement for the unamortized portion of expenses. Items such as share issue expenses, ancillary borrowing costs and discount or premium relating to borrowings. So if this type of expenditure is amortized over the period, that is the solution given under the Schedule 3. Okay. So that is what given here. Point number 3 you refer. Certain companies have taken a view that is an acceptable practice to amortize this expense over the period of benefit of normally 3 to 5 years. So it is presented under the current assets, under the other current assets, or non-current other current asset or non-current assets, and it is amortized over the period. That is what said. Conclusion. Schedule 3 does not deal with any accounting treatment of this item, and the same continues to be governed by respective AS best practices. So a company can disclose the unamortized portion of such expenses, unamortized expense under the head other current asset or non-current assets, depending on whether the amount will be amortized in the next 12 months or thereafter. Okay. So pre-incorporation expenses or amortization expenses can be amortized over the period and debited to P&L account. That's what they are trying to say. Then come to the next one, notes to accounts. So after completion of presentation of balance sheet, contingent liability. What is this contingent liability? Contingent liability means may or may not be paid by the company. Depends on the various circumstances which is not in the control of the company. For example, somebody put a case against the company. Court will give the judgment later. It will come in favor of company or it will come against of company also. For example, somebody said this company has to pay me loss of 1 crore rupees. It is in the court. Court will decide whether this company should pay or may not pay the fine. That will be decided by the court only, not by the company. That is called contingent liability. Liability which arises that is not in the control, that liability may or may not happen. That is depends on the court decision. That is contingent liability. Contingency means uncertainty. Liability is not certain. Okay, that is contingent liability. It should not be part of your balance sheet. It should not be part of your balance sheet. It should be below the balance sheet. It should be below your balance sheet as a notes to accounts. As a notes to accounts, it should be presented. See here. Contingent liability shall be classified as claims against the company not acknowledged as debt. Claims against the company not acknowledged as a debt. Somebody has given claims against the company, but the company is saying we will not pay this amount. Okay, that is not acknowledged as debt. Guarantees. Company has given guarantee to somebody, but company may pay or may not pay. It depends on the opponent, the person who is got the money actually. Okay, company may pay only if the person failed to pay, then only company will pay. Otherwise, company need not to pay anything. That is contingent liability. Okay. Then what else? Commitment shall be classified as contingent liability and commitment and all we have to present below the balance sheet. It should be part of our notes to accounts. Commitment means estimated amount of contract remaining to be executed on capital account not provided for, uncalled liability on shares and other investments partly paid. All these things are commitment. We made a commitment. We purchased the shares from someone. We invested in some company in their share capital. Okay, they called only 80 rupees. Their share capital, the face value is 100 rupees. They called only 80 rupees. Balance 20 rupees they did not called up. So balance 20 rupees if they called up, we have to pay because we invested in their company. Correct? That is uncalled liability on shares and other investment partly paid. I invested in one company, their share price is 100 rupees, they called up only 80 rupees, 20 rupees is not called up by them. If they called up 20 rupees, I will pay that 20 rupees to that company. That is commitment. I already committed, but not called up by that company, so I did not pay it. So whatever the commitment, I have to write separately. Then what is the next point? This is also important. The amount of dividend proposed to be distributed to equity and preference shareholders for the period and the related amount per share shall be disclosed separately and not to be shown in the balance sheet. What they are trying to say, if it is a proposed dividend, we need not to account inside the balance sheet. We need not to provide inside the balance sheet. We need not to make a provision. We can only provide in notes to account. That is enough. So proposed dividend should be part of your notes to accounts. Should not be accounted inside the balance sheet. It should be presented external to the balance sheet, and below to the balance sheet we have to write it as a notes to account. There should not be affect anything inside the balance sheet. Okay. So like this, you have a lot of points. So with this thing, I just wanted to discuss all these items wherever the possible manner. So I think you got some idea on preparation of balance sheet and P&L, and the purpose, our whole purpose is presentation. What I am requesting you, all of you, is please write down the format at least 2 to 3 times. Just format without any problem working out. You please write the format first. P&L format, statement of P&L format, balance sheet format. You please write down 3 times minimum. You write down. Then you work out the problem, because their expectation is presentation. How you are presenting, that is the expectation. So in next class we will solve the problem. We will try to solve the suggested answer problems, maximum suggested answer problems. So what I am suggesting again you is, please go through all the format properly and write in the notebook. Please write in the notebook only format. Don't work out the answer. Correctly write the format first. Then we will work out the answer, because very simple questions are very simple. Examination questions are very simple. It is very easy to solve the answer, but how you are presenting, that is the matter. Okay. So with this, today class is over. In next class we will discuss the suggested answer problems. Okay, thank you.